Hi everyone, I'm Sharada Mani, Assistant Professor, Department of Commerce. Today we discussed about elements of insurable risk. Okay, it means as a term specifics are those risks that insurance companies will cover. Okay, some common examples for that is included health insurance, danger of life, fire, perils of sea, etc. The risk must satisfy certain conditions to become insurable, so the insurer is not placed in the unpaired position. Okay, insurability is essential component of any insurance policy. Some of features of insurable risk include defined proof of loss, measurable risk, non-cashable nature, affordable premium, calculatable, accidental and large losses, etc. Okay, in that insurance risk can be defined as the risk that can be protected under insurance coverage. These are the common most specific the risk to health, life, identify, property, investments, etc. All are the insurable. Risk are either pure or speculative. The former is insurable and the later is not. Pure risk are future classified into personal property and liability risk based on the insurable risk. Features of insurable risk include measurability, defineness, accidental and non-cap nature, statistical probability, etc. Insurable risk are those contingency insurable companies will cover that tells that are some risk insurance companies do not cover. There are many risk individual undertakes in the single day, but it is impossible to pay premium of those risk make claims when things go wrong. Let's consider two perspectives here. The insurance and the insured. The insurer often deals with many customers with multiple concerns: health, life, car, house benefits, theft, etc. These are the insurable in most cases. Okay, and this characteristics are accidental in nature. A contingency that has occurred be beyond the insured control. To the best of their ability, the insured should take all the precautions to avoid such as the event. Next one is deficiencies. Any loss should be attributable to the case or a specific time and a place. For the insured to assert their claims, solid proof of loss is necessary. The next one is measurability. The insurability of the risk depends on the extent of the loss. In calculable losses to it either for the insurer to determine premiums and the claim amount. The next one is non-castable in nature. Insurance companies do not usually insure risks that are usually unforeseen or cannot be precisely predicted. And the next one is large loss. The financial loss incurred by the insured should be large enough from the individual perspectives. The next one is statistical probability. Any contingency should be statistically predictable to become insurable. This type in the determination for premiums. It have sometimes there are three major types. Okay, first one is personal risk, property risk and liability risk. Personal risk means it involves the risk to human life and health. It can also mean a risk identity or financial investment. Other personal risk include unemployment, bank robbery, identify theft, accident, etc. Property risk, any risk an individual property like a house, automobile, business, etc. Liability risk, a liability holds a party responsible for certain risks or losses to other parties. For example, a car accident where the other person is injured or the car is totaled. So that in that insurable and non-insurable risks, there are some differences. That is, the main difference between insurable and non-insurable risk is that insurance company covers the former while they do not cover the latter. Non-insurable risk can become so if they do not satisfy the requirements of insurable risk, measurability, definition, and accidental and non-catastrophic is nature, large losses. The reason is that non-insurable risk may become too risky to the insurer. Therefore, insurer try to avoid insuring such risk if the probability of occurrences. So, thank you for watching.